we're still micro-focused on the Mag 7, whether it's a weighting consideration or whether it's just a news flow consideration. For someone like you looking at the markets, is that still truly the case?
Yeah, I mean, I think the next few weeks are all about earnings. We're going to have a big week. If you thought this week was volatile, wait for next week. We have Microsoft, Apple, Amazon, Meta. All of these companies are reporting. They're about a third of the NASDAQ by market cap weight. And so there's going to be a lot of attention on the earnings from these Mag 7 names. And when we get later in August, we're going to see NVIDIA. And that's been the big story in the first half of what's been driving the market higher. So I think there's a little bit of trepidation around earnings season. I think the earnings are going to be fine for the Mag 7, but there's certainly some trepidation if they're going to meet kind of the whisper numbers and the expectations that have been set, which are very high. Valuations are very high in these Mag 7 names. And I think the market's starting to pay a little bit more attention to all the stocks that didn't keep pace with the Mag 7, financials, small caps, cyclicals outside of tech. These are the areas that are driving the market right now.
Anthony, have you been one of those who've thought that the valuations have become silly, absurd, or have you actually thought there was reason for NVIDIA getting to its $3 trillion market cap?
Yeah, I think it's fair to question some of the valuations of big tech right now, certainly based on, AI and some of the payoffs that may take a few more quarters or years to develop. And so I think it's right for investors to question some of the valuations. But I also think the secular drivers of artificial intelligence are real, and I think they will generate profit for these companies. They're already generating profits for companies like NVIDIA and Microsoft and Alphabet. It's just the question, are they meeting elevated expectations right now? And it's normal to see over the course of a cycle, investors kind of get ahead of where the profits really are. They take those expectations back. Provides an opportunity for investors to look at some of these stocks that have really moved higher, maybe at a little bit cheaper price. And so if you have a balanced view of both growth and some of the cyclical opportunities that have developed, I think you can use a pullback in big tech as a means to put more dollars to work.
Anthony, one reason that we watch Alphabet, the parent of Google, so closely is largely because it goes first, right? And it gives us an indication of how cloud will do, but also advertising will do. And then that sets us up for this week, next week, that you perfectly framed for us. But there is more to the market than just earnings. Are you able to apportion some weighting to how much the market is looking at the rate cycle against what the Mag 7 do in terms of EPS growth?
Yeah, I think it's a great question. Obviously, in the first half, there was a lot of questions about the economy, inflation, interest rates. And so a lot of investors piled into big tech because the profits of these companies were very visible. I think what we're seeing in the second half, or at least at the start, is that there's a little bit more clarity or certainty about a soft landing. Interest rates look like they might come down starting in September from a Fed rate cut. Inflation is moderating lower. We saw that in the PCE data this morning. And so I think there's a little bit more confidence in the other, 493 S&P 500 companies that their profits and their outlooks might actually improve in the second half. And so that macro backdrop that was a little bit more uncertain in the first half is starting to get clarity in the second half. And I think that's why you're seeing some money rotate out of big tech and those magnificent seven names and into some of the areas like small caps and financials and industrials and materials, which are performing better today. I think investors are starting to give those areas a second look.
Anthony, the reason we love your experience over the last couple of decades is because you don't just look at certain equities or asset classes, but you look globally as well. This rotation, it's kind of been happening in the Japanese names have sold off, European chip makers too. And I'm interested as to whether or not you're seeing some global narratives build as well.
Yeah, I think it's a great question. I mean, you're certainly seeing normalization in terms of economic growth patterns, inflation and interest rates, not only here in the U.S., but in Europe, in Japan. Japan will have their Fed, their BOJ meeting next week. They're talking about actually normalizing policy by hiking rates. In Europe, you've seen the ECB cut rates in June June. They're on pace to cut rates again in September. That's because there's this balance between growth and inflation. And think about the narrative over the last 2 years, not only in the US, but across the globe, of really high inflation, really high growth, and really high interest rates. And what we've seen over the last 6 to 12 months is more normalization in inflation, the opportunity to normalize interest rates, and a pretty solid economic environment in Europe and in Japan. These areas are performing well and could continue to perform well if investors look for that cyclical trade outside of big tech, which is really dominating U.S. indices.